Hello everyone. So the bullish bias has been making sense. We've been bullish the past few days. So in today's video, we're going to take a look at the S&P 500, the NASDAQ 100, the Russell 2000, the dollar, and the bonds. We're going to continue looking at the correlation between the dollar, the bonds, and the overall market. All right. So without further ado, let's get started with the video. So number one, we've been taking a look at the bonds. We know that when the bonds are very overextended to the downside or upside in terms of the Bollinger Band, the overall market tends to follow alongside. So I was showing how the bonds are very overextended to the downside. And because the bonds have a correlated relationship to the market, if the bonds do well, the overall market does well. So I was saying the bonds are going to get a bounce, and that would lead to a bounce in overall bullishness in the overall market. So very simply, if we take a look at the overall market, the S&P 500 on a daily chart, we can clearly see that the market has been bouncing purely due to the overextensions of the downside on the bonds. So now things are starting to get a little bit interesting. We closed above 442. We had a huge rally towards the end of the day. And now we're at a major level of resistance. 443 is major resistance. After that, then it's 445 to the upside. But of course, we have to get over these levels of resistance here, the recent highs, but we're getting closer to a level of resistance now, and the bonds are continuing to bounce. But overall, what I've been saying is, regardless, we're going to have a bullish bias, even if we get like a pullback, even because now it seems like 437, like a break down below 437 seems to be out of the question. But what we're going to continue watching is buying dips and being bullish on dips, right? And once again, regardless, even if we were to miraculously close below 437 somehow on the SPY, what we're mainly looking at is if the bonds, even if the SPY is falling, we want to see the bonds continue to rise. So even if the SPY is really capitulating, we want to see the bonds continue to rise. If the bonds continue to rise, regardless of how low the SPY goes, we're going to continue being bullish overall on the SPY. All right. Now, here's where things get a bit more interesting. All right. We're going to take a look at the dollar. So with the dollar, we know that the dollar has an inverse relationship to the market. If the dollar is falling, that's generally bullish or good for the overall market, right? So what we're seeing right now is that the dollar is starting to get very overextended to the downside in terms of the Bollinger Band. Similar to what was going on with the bonds, the dollar is starting to look like that. There's obviously still more room to go to the downside for the dollar. We're not extremely overextended. Like a very extreme overextension to the downside on the dollar would be if we open. You see how we opened outside of the Bollinger Band? Closing outside of the Bollinger Band is not enough. We can continue falling lower. Opening outside of the lower Bollinger Band is very overextended to the downside. And if we open outside of the Bollinger Band, it is going to be such an easy short opportunity on the SPY. Once again, if we end up opening lower, so the Bollinger Band, right? If tomorrow we end up opening outside of the lower level of the Bollinger Band on the dollar, that is a very high probability that the dollar is going to bounce. And if the dollar bounces, then that is very bearish for the stock market. And we will be bearish overall in terms of our day trading momentum and our bias, if that ends up being the case. Okay, so basically what I'm showing is the dollar is starting to get a bit overextended to the downside, and it's almost due for a bounce. And if we do have a bounce on the dollar, that means we're going to get a pullback on the SPY, but it won't be a major pullback. It'll just be enough to get a pullback into dips, in my opinion, for a continued move upwards. And yeah, that's really that. You know, like for the NASDAQ, we're getting a bit of a bounce. All the large tech stocks got a bit of a bounce as well. Tesla, Apple, Microsoft, Google, Nvidia. The big tech names got a bit of a bounce. And then the IWM is continuing to be the biggest winner, primarily due to the earnings that are going to come towards the end of the week. Thursday, Friday, and we just continue to rise on the IWM. And an honorable mention is crude oil. Crude oil is continuing to do really, really well also. And XOP, things like that are starting to get a bit overextended to the upside. But this helped push the Russell up, and it helped keep the S&P 500 up as well. But now that the dollar is starting to get really overextended to the downside, we could expect some sort of stagnation or a bit of a pullback and a continued bounce up in the overall market. So there's my thesis. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. I'll see you guys bright and early tomorrow morning. Thank you.